Netflix beating estimates on both the top and bottom lines, raising full-year guidance, citing strong member growth and momentum in ad sales. Joining us now to break down the numbers, Alicia Reese, Wedbush Securities, a senior analyst. Anything, I mean, the stock is on such a roll at this point. Alicia, anything to make of today's action? Anything that disappointing?
It's really difficult to poke holes at the performance, but expectations were exceedingly high going into the print. So the beat and raise wasn't quite as exciting, I think, as many investors had wanted to see going into the print. But I would point out the quality of the beat was still incredibly high. I mean, Netflix doesn't give the metrics anymore, but the results strongly suggest decent subscriber growth with average revenue expansion. And the tier mix is holding really nicely against price increases. And that just shows remarkable elasticity on those tiers.
Yeah. Can be success, you can be a victim of your own success. When you're a $31 looks like a big sell-off, but the stock's gone from, under $200 a couple of years ago to almost $1,300. So probably to poke holes at anything the company's doing at this point is doesn't make a lot of sense. We keep hearing, though, about, not surprisingly, content will always be king, and you need hits, and you need probably not just a one-shot deal with a movie, but you need like a series, like I don't know. I'm grasping for it because I don't think there is one right now that I'm just dying. There's no Breaking Bad for me. What is there for you?
Sure. Yeah. It's not necessarily for me, but the big deal right now is Squid Game. And I think so Netflix just released its engagement report with its earnings for the first half of the year. And what we saw is a huge uptick in Squid Game property. I mean, the third season came out at the end of the second quarter, so we'll probably see a lot of viewership and engagement around that in the third quarter as well. But you saw a lot of engagement for the first and second seasons. And so all of the new seasons that come out drive a lot of viewership of the original season. So as Netflix's catalog gets more and more robust, and they get more and more content from sourcing around the world, going to specific markets where people really like it, and being able to leverage that across its markets, that engagement is going to continue to rise. Somebody did point out on the call, though, that the engagement per person has been falling since they've been reporting the data in 2023. But I really don't think that's concerning, where it's falling from maybe 65 hours per month per average subscriber to over 50 right now. That's still a ton of engagement. And many of us are not watching quite that much TV, but still paying for the premium tiers. So a lot of people out there watching a lot of TV, a lot of Netflix.
We had someone on earlier talking about YouTube. Who can challenge Netflix at this point? Did the YouTube streamers need to get together? So YouTube is it? The streamers need to get together to create one that could maybe do what Netflix does?
Well, I mean, it's definitely an interesting space where there's, a lot of competition outside of that huge top tier of viewership with between YouTube and Netflix. They do dominate the viewership, and there absolutely could be some consolidation in this, smaller streaming players. There are too many streaming services right now, I think, and I do expect some consolidation, but I still don't think there's really much chance of them competing with the likes of Netflix. They just have too big of a global footprint and too much access to content to play for all these people around the world. Yeah, YouTube is a huge competitor for time, but the type of content and the quality of the content isn't really aligned. They can coexist.
When you see YouTube, though, gaining in terms of the share of U.S. screen time in the U.S. and Netflix staying still at 8%, YouTube being 12, I think, 0.5% or so in the recent numbers, Alicia, where is YouTube gaining that share from? And was that Netflix's share to take?
Not necessarily. I think so. What we're seeing is a lot more engagement on YouTube related to its shorts. And so that's just somebody pulling their phone out of their pocket when they're doing something else, and they have a minute to spare. Like they're, on the subway or on the train or standing in an elevator doing this or that. They're pulling out their phone, to do that. And you can increasingly, more and more people are watching on their TVs at home. So that is maybe impinging on Netflix's time to an extent. But by and large, it's the shorts, I think, that are taking a lot of that share of time. And that's not necessarily at the same time they would have been using Netflix.
Alicia, the whole media landscape is in so much flux right now. Now we've got arguments about, streaming's great, it's fine, but maybe legacy assets are worth more than people thought, even though they obviously continue to see cord cutting and the like. But all these media companies, and I'm sort of speaking from our experience here at Comcast and what's happening at Warner Brothers, what's going to happen when all the cable assets are spun off? Is there going to be consolidation then? Will there be what do you foresee, and will that be a consolidation? Will that compete effectively with streamers?
I think what we're seeing is the last leg of that movement from linear to streaming is sports. I mean, really, if sports come off linear in a more meaningful way, and that trend has certainly started and it's underway, the advertisers are going to continue to follow. And advertisers are seeing really incredible targeting capabilities on streaming platforms. Amazon's giving some really great opportunities for advertisers to really leverage all of the viewership data along with e-commerce data. And it's difficult for linear to compete with that, frankly. And so I think as sports continue to go towards the likes of Apple, Amazon, and others on the streaming platforms, it's going to be a big challenge for linear TV. And yeah, I suppose consolidation might be the route that they take. But ultimately, I think everything's going to switch to streaming.